Hello, it's Pam again with our wrap up on how to forecast our revenue. Now, stay with me here because this is a message to every single business owner. This isn't something you would leave to accountants and bookkeepers, even if you had them, okay? Even my biggest clients do this exercise because they want to know that what they're seeing makes sense in their own head. And part of how we're going to make finance fun for 10,000 entrepreneurs over the next year is by making the money, the business, the accounting make sense to them the way they think about it. So if the entrepreneur thinks their business looks like this, we're going to figure out how to make the numbers talk about the business that looks like that. Okay, so stick with me here. This is a piece of cake. You've done a lot of work this week. Really proud of you. We just have one more exercise to do. And the one more exercise is just to pull it all together. So I'm going to recap our example and give you one more little twist, and you'll see how easy this is. And you can go back through these videos one at a time if you want more detail. But if this is the only one you're watching, we're going to talk through why and how to forecast your revenue. Later on, we're going to talk about expenses, but this week is all about revenue. So first off, what we said was, one way or another, figure out how much cash you've collected from your customers this week. We talked about the fact that you can get that from Stripe reports, Square reports, PayPal, looking at your bank statement. One way or another, even if you haven't kept any books ever in your business, you can figure out how much cash you've collected from customers this year. So get that number. In our example company, that number is $90,000. So very simply, we said through September 30th, we collected $90,000. That's $10,000 a month. Therefore, we can assume that we're going to have the same average for the next 3 months. And if we do that, 90,000 plus 30,000, then our full year revenue is going to be 120,000. Piece of cake, all done. Then we said the three things you need to think about before you just kind of put that in stone and say, yep, that's my forecast, is one, is there going to be anything different about how you show up in the business over the holidays? And does that have an impact on revenue? So this would apply mostly for coaches. If you're a business coach, a life coach, any kind of coach, and you're billing and you bill for your time, this will have an impact on you. So think about whether you're taking vacation at all during the holidays. If you are, reduce that estimate for the last 3 months a little bit. The second is think about your customers. Do your customers have any reason that they actually increase buying from you during the holidays? So it would probably apply to product people more than service people. But if they're going to buy more than you during the holidays, increase that average for the last 3 months a little bit. Or are your customers going to be taking time off themselves, in which case you'd have the same sort of impact that you being out of the business would have. So you're just going to look at those couple of factors about you and your customers to say, you know what, the average is 10,000 a month, but I know I'm taking off 2 months, or at least 2 weeks in November, at least 2 weeks in December. So I'm going to decrease that forecast a little bit. So I'll do 10,000 in October and 5 each in November and December. And that's how you make that adjustment. And then third and last, and this is for entrepreneurs who have just started up, and again, you could be in a shoebox, doesn't matter, or entrepreneurs who have grown really fast this year. If you're in either of those two situations, then what you want to do is just think a little bit about whether you use 10,000 as your average or not. Because if you started the year at $1,000 a year, and $1,000 a month, and in September you had $40,000 a month, then 10,000 is probably not the right number to use for you going forward. You may want to use the average of the last 3 months to determine your average in October, November, and December. So that's it. Figure out how much you collected through September. Forecast what you're going to see in October, November, and December based on that number, plus a couple of overall business concepts that you know about for the next 3 months. And trust me, every single client of mine is doing this to verify the work that their bookkeepers, accountants, and sometimes I am doing for them. And every single entrepreneur, no matter how big you are, can do it as well. The value will show up when we finish up the forecast next week talking about the expenses side. And we are all out to minimize your tax bill, maximize how much value you get out of the information that's right there at your fingertips, and most importantly, making finance fun, which we're going to do. I promise. Stick with me. You'll be one of the 10,000. So grab a copy of the book on Amazon. It's your first CFO. And take a listen to, subscribe to the Cash Flow Podcast online, or podcast on iTunes rather, or catch it on WCKG Chicago, and get more of these tips and tricks for you, especially as we roll into the end of the year. So take care, have a great day, and I'll see you again soon. Bye-bye.